Hello everyone. We are studying cash flow from operating activities. So when we prepare a cash flow statement, the first thing that we need to find out is cash flow from operating activities. This chapter has 6 marks weightage in the CBSE. So this is our format when I have to find out the cash flow from operating activities. You will have the profit before interest and before tax because you want to know your profit that you are getting from operations. In CBSE, profit before interest and tax is called net profit before tax and extraordinary items. So you will start with net profit before tax and extraordinary items. And to find this net profit before tax and extraordinary items would be your first target. For this, you will prepare a working note. Why are we finding this net profit before tax and extraordinary items? Because we are doing the indirect method of finding the cash flow. Direct method is not there in our syllabus. So now this video we are focusing how do we find the profit before tax and extraordinary items. What do you do is you will find your net profit for the year. How will I find the net profit for the year? You will be given an extract of the balance sheet where they will give you the profit at the end and the profit at the beginning. So the profit at the end minus the profit that was there last year, you will get the profit that you have earned in the current year. So once you get the profit that you have earned in the current year, but there is an obvious thing that from the profit that you earned in the current year, you might have transferred something to the reserves. You might have distributed dividend. You might have given last year's a proposed dividend. From the profit that you earned, you might have paid tax. So all these things that you have done from the profits that you have earned, you will have to add it back to know the actual amount of profit that you have earned. So the first target of yours when you're finding the cash flow from operating activities, you have to find out the net profit, the actual profit that you have earned before doing any transfers. So before doing any transfer to reserves, before paying off dividend, before doing anything, what is the amount of profit that you have earned? It's very easy to find out. So you whatever is your closing net profit, from that you will minus the amount of profit that is there in the opening balance sheet. You will get your net profit for the year. But understand this profit for the year that you find out is after adjustments. After the adjustments of the extraordinary items, when I say it is after the adjustments of extraordinary items, that means you will have to add back those things that you have removed from the profit so that you get your actual net profit that you earned from operations before the tax and before you had removed any extraordinary items. So how do you find it? You will have your net profit for the year after adjustments that would be appearing in the balance sheet. For the year, you will find out closing minus the opening. Then you will start adding back all those things that you might have removed from your profit. So if you have transferred anything to the reserves from your current year profits, you will add that back. If you have proposed a dividend in the last year, you might have paid it in the current year, the final dividend. So you will add back the proposed dividend of the previous year because you used your profits of the year to pay the current year, to pay the dividend in current year. You will also add back any interim dividend that you have paid. You should remember over here that dividend is always added back on paid basis. because you use the profits to pay the dividend. So your extraordinary items are the dividends that you have used, that you have given, and you will add back only the dividend that is paid. So proposed dividend of last year, the dividend that you proposed last year is going to be paid in the current year. That is why when you add back, you will add back the proposed dividend of the last year, add interim dividend, add any other dividend that you have paid. If you have paid any tax, okay, the tax of the current year, after doing adjustments of refunds, you will add that also. If you have done any extraordinary expenses, add that back. If you have received any extraordinary income, remove it. Then only you will get your net profit before tax and extraordinary items. Let's do it with the help of an example. I have to find out the net profit before tax and extraordinary items. How will I find that? First thing, I will use net profit for the year. Net profit for the year, I will get closing minus opening. If I see 2023 is my closing year and 2022 is my opening year. Okay, now I will do closing minus opening. So the net profit for the year, this is the closing minus the opening. So you will do 800,000 minus 500,000. You will get 300,000 minus 500,000. You have dividend payable. As I have already told you, you will add back all the things that you have paid. That is the dividend, that is the tax, everything on paid basis. So dividend payable is ignored. You have proposed the dividend of the last year and the current year. So the dividend that you proposed last year, you are going to pay off in the current year. So propose the dividend of the last year is 300,000. There is no interim dividend. There is no any adjustments. There is no provision for tax. There is no extraordinary expense. There is no extraordinary income. So you need to keep the format in mind before deciding on anything, and then you will be able to find out the net profit before tax and extraordinary items. So your net profit before tax and extraordinary items is 600,000. You will write only the things that you need. Okay. Now the next question we will see. I have been given the extract of the balance sheet. This is the last year and this is the current year. Are you with me? This is the last year and this is the current year. You have equity share capital, you have preference share capital, you have surplus in the balance sheet. That means this is the retained earnings, or you could say this is the net profit that is shown in the balance sheet. Closing minus opening. That means you will do 450,000 minus 250,000. So you are going to get 200,000. We will take only the dividend that is there with us. On what basis? We will take the dividend that is there with us on the paid basis. So dividend is on paid basis. So this will be ignored. You have proposed dividend on equity shares for the last year, 150,000, and for the current year, 100,000. Dividend is taken on paid basis. Proposed dividend will be always be taken for the last year. So it is for the last year. An interim dividend of 50,000 was paid on 31st December 2022. So you have paid an interim dividend on 31st December 2020. So you have interim dividend 50,000 that was paid. So I will add back 50,000. Then you have any dividend that is paid during the year on equity and preference shares. About equity shares, they will give us information. But you should know that preference shareholders receive dividend irrespective of the fact that profit is earned or not. So this is 10% redeemable preference shares. So you are going to give them dividend of 500,000, 10% preference dividend. So you are going to give them 500,000 into 10%. So dividend on preference shares. So you have dividend on preference shares 50,000. There are no provisions for tax given, no extraordinary expense given, no extraordinary income given. So your net profit before tax and extraordinary item becomes 200,000 plus 150,000 plus 50,000 plus 50,000. So it is going to become 450,000. I'll go to the next sum. Illustration number 17. This is closing. This is opening. This is the current year and this is the last year. Preference dividend would be 8% on the 10,100,000. Closing minus opening, 25 lakh minus 7 lakh. So your net profit for the year is 18 lakh. Then you have an interim dividend of 100,000. So you will add interim dividend of 100,000. No information of proposed dividend, but you have information of preference dividend 8%. So it is 80,000. So your net profit before tax and extraordinary items would become 19 lakh 80,000. Dividend on preference shares is given even if it is not mentioned on the question. Okay. Now we'll see over here. Closing minus opening. Net profit before tax and extraordinary items. So it will be 540,000 minus, and you had a loss in the opening of 200,000. So 540,000 minus and minus 200,000. So it will become plus 200,000. So this will become 740,000. Proposed dividend of the last year is taken. Current year's proposed dividend will be paid in the next year. So proposed dividend of the last year is 200,000. Any transfer to any funds, any transfer to any reserve is also added back. So I will say transfer to workmen compensation reserve. Provision for tax that is made during the provision for tax that is made during the current year, 230,000 will also be added back. So you will get your net profit before tax and extraordinary items, that is 13 lakh 30,000. I'll go to my illustration number 19. Closing minus opening. Net profit, that is surplus in the balance sheet, closing minus opening. Transfer to reserves will be added back. Proposed dividend of the last year will be added. Interim dividend that is paid will be added. Provision for tax for the current year you will add. Income tax paid. Now listen to me very carefully. We do the provision for tax that is net of refunds. So you have created a provision for tax for 200,000, but you have paid 216,000. So Whatever you created, only that much you might have subtracted from your profit. So you will add 200,000. So after adding all this, you will get your net profit before tax and extraordinary items. Okay. Go to the next sum. That is your illustration number 20. You want to find your net profit before tax and extraordinary items. If you see over here, you have the reserves and surplus, you have share capital, you have long term borrowings, you have notes to accounts, you have reserves and surplus is 695 and 520. You have general reserves and surplus breakup is given over here. There is general reserve, workmen compensation, and surplus in the balance sheet. So when you're finding the net profit, what will you do? Difference between closing and opening. So 170 minus 110 will be your surplus. Then if you see, there is a transfer to general reserves. In each last year, your general reserves was 210. Now it is 275. So 275 minus 210 will give you your transfer to general reserves. You will add back. Similarly, you have a transfer to workmen compensation fund 50,000. You will add back. You have the provision for tax. You will add back for the current year. Okay. Then what is the information? You have proposed dividend for the current year as 116 and for the last year as 18. So you will add back the proposed dividend. So you will get your net profit before tax and extraordinary items. Now you can try illustration 21, 22, 23, 24, so that you can find out your net profit before tax and extraordinary items.